Happy Monday, everybody. I hope you had a great weekend. As we do always in this video, let's recap last week's market action and we'll do a preview of this coming week. We're getting close to the end of the year, and I'll remind you, but if you're watching closely, markets will close early on the 24th of December, but they will open a full day on December 31st. Now, today is December 16th, 2024, and this is your Monday market update. Last Monday, stocks started the new week and pulled back from recent record highs as traders booked profits ahead of the key economic data that was due later in the week. Negative headlines surrounding NVIDIA weighed heavily on the tech sector, with shares falling 2.5%. China accused NVIDIA of violating an anti-monopoly agreement, raising concerns over regulatory hurdles for U.S. technology firms overall operating in China. Meanwhile, the New York Fed's consumer inflation expectations rose to 3% from 2.9% in October, signaling elevated short-term inflation worries. Despite this, overall household financial outlook for 2025 remains steady. Treasury yields rebounded to 4.2%, adding further pressure on equities. On a global scale, China unveiled a new round of robust economic stimulus measures, which initially bolstered sentiment. However, the impact was limited in U.S. markets as investor attention stayed on the rising yields and the tech sector weakness. The Dow was down 0.5%, the S&P was down a bit more than 1%, and the NASDAQ was down about 0.75%. On Tuesday, markets started strong but quickly reversed as focus shifted to tech volatility again and caution ahead of the CPI report. Alphabet provided a bright spot, rallying 5.5% after announcing progress on its quantum computing chip, Willow. This news underscored growing investor enthusiasm around quantum computing as the next big thing in tech. Offsetting Alphabet's gains, Oracle shares plunged 6.5% following underwhelming earnings, which fueled profit taking across the broader tech sector. Economic news remained upbeat with small business optimism index. Remember, I told you I'd be watching that, surging to 101.7. It's the highest level since June of 2021 and surpassing expectations. This positive sentiment pointed to improving business conditions among smaller firms. Additionally, the Q3 productivity and cost report showed unit labor costs declined to 0.8%, easing wage inflation concerns. That's important. Dow, S&P, and NASDAQ were all down about 0.33%. Equities rebounded on Wednesday, led by big tech stocks, with the NASDAQ surpassing the 20,000 level for the first time. Markets did shrug off an uptick in headline CPI inflation, which rose 0.1% to 2.7% year over year, but that did match expectations. The traders focused instead on increasing certainty of a December rate cut, with odds rising now to 95% that that's going to happen. Tech outperformed thanks to renewed optimism around AI and quantum computing. While the strength in tech dominated headlines, other sectors saw some mixed performances. Defensive sectors, including healthcare and utilities, they underperformed. Notably, United Healthcare fell 5.5% amid concerns over bipartisan legislation targeting pharmacy benefit managers, which did pressure the broader healthcare sector. Despite lingering trade tensions with China, traders remained confident that pro-growth policies and dovish Fed expectations would sustain the current rally. The Dow was down 0.25%. The S&P closed within striking distance of its all-time high, up almost 1%. And the NASDAQ was up 1.75%. On Thursday, stock fell as hotter than expected producer price index data hotter than expected producer price index data and a jump in weekly jobless claims, rekindling concerns about stagflation. We've heard that before, right? Headline PPI rose 0.4% month over month versus expectations of 0.3% and surged to 3% year over year. Remember these numbers, that's how they come in. The increase was driven primarily by volatile food prices, while core PPI rose 0.1% month over month, in line with forecasts. Weekly jobless claims unexpectedly jumped to 242,000 versus 220,000 that were expected, marking the highest level since October. Continuing claims also edged higher, 1.886 million, raising questions about the labor market momentum. Internationally, sentiment weakened following Brazil's surprise 100 basis points rate cut. And again, remember, we go out to wherever the central banks around the world are doing it. Stark contrast to the accommodative monetary policies pursued by major central banks across the world. Additionally, Adobe delivered soft earnings guidance, adding pressure to the already weak tech sector. The European Central Bank, they cut rates by 25 basis points as expected, but cautious commentary on growth, particularly regarding potential U.S. tariffs under the incoming administration, weighed on European markets. Despite some strong corporate earnings, the S&P 500 ended the day near its session lows. The Dow closed down 0.5%. So did the S&P, down 0.5%, near session lows, as I said, and the NASDAQ was down 0.75%. Stocks opened slightly higher on Friday as tech stocks keep getting upgrades and price increases. Please note this, we are in the mode of watching the analysts adjust their target prices based on the moves in the stock. bit backwards, but common this time in the market cycle. Nothing fundamentally changes, but when you have a price target of 100 and the stock's trading at 125, if you still like the stock, you have to raise your target, and that's what's happening. They're coming like a tsunami right now every day. We did get some Fed speak, but not from current Fed heads. Remember, they're in the blackout period before this week's meeting. Former Dallas Fed President Kaplan said that the inflation looks a little stuck, and he did focus on the government spending. We'll see what comes of that this week. Fed meeting week. Since we spoke about the target prices, I want to address something that everyone should keep in mind. Yes, we rely on analysts to give us outlooks. LPL's 2025 outlook just came out. But note this, how good are they? In the beginning of this year, S&P 500 estimates were from 4,200 to 5,200. Reminder, we're over 6,000 now. And about rate cuts, don't even get me started. Estimates went from 7 to 8 this year to none, now to 3, moving targets. Another reason we need to have a goal, get a plan, and stick to it. Just for a reference point, as of now, average forecast for 2025 S&P, 6630. That's about up about 10% from here. Market strength update, 14 new lows and 8 new highs. By the end of the day, Dow closed about 1/4% higher, down about 1/4%. S&P was pretty much unchanged. The NASDAQ was up just slightly. For the week, the markets followed prior week's records with the Dow down almost 2%, 7 straight days, the longest Dow losing streak since 2020. S&P down about 2.3%, 2.3%. And the NASDAQ eked out a gain about 1/4%. For those looking at the leadership, NVIDIA was down more than 2%, Meta was down 1%, Amazon slightly lower also. All of that as there is little left this year to move markets. The Fed meeting with future markets futures markets again saying that there's a 95% chance we'll get a 1/4 point cut. And I do not see Powell disappointing markets this close to Christmas and year end. Though watch for real market moving action. The outlook Powell puts out there in the press conference, can he thread the needle? We're going to see. Let's see what this week should bring. Overall, the main event will be, of course, the Fed meeting, but we just pointed out what we expect there. We'll also get the SEP, that's the summary of economic projections, and the dot plot, which comes with that, with expectations from the Fed heads themselves. But like the S&P target I mentioned, I would not put so much stock in them. We will get PCE and core PCE again. Remember, those are the favored inflation reports from the Fed, but that won't be till Friday. The Fed meeting announcement is on Wednesday, and we'll just have to see if we think they get a sneak peek on that or not. I'll be watching a lot this week. I'm really unsure if they'll even get noticed, but we'll get November retail sales report. How are the consumers doing? We'll get some important earnings, Nike and FedEx and Micron, and we'll end the week with jobless numbers and consumer sentiment. Again, in my opinion, barring a major surprise by the Fed, these markets should end marginally higher before the end of the year, but there will be some pressure after the first of the year when we turn the calendar. I don't think it should change our planning, but as always, we need to have our clear goal, as we've been discussing in meetings, know our risk profile, and stick to the plan. If we have not discussed this, please be in touch. For now, have a great week, and we'll talk to you soon.